I managed to turn from $500 to 10,000 in a year and a half.
And euro was going up and down 100, 200 pips a day. Mario Draghi was on the front page of every video. I remember those days very well. That was a lot of volatility.
I had a deal with my parents. I didn't want to go to college, and straight after high school, I wanted to start to trade. To be honest, at this moment, I believe it was
Hi, everybody. This is Boris Schlossberg. Welcome to the Trading Battle, where we talk to some of the best traders across the world and learn all about the various techniques, methods, and applications of trading. Today, we are very, very thankful to have Nikola Delic with us. But before we start, don't forget, the Trading Battle content is amazing. And if you want to be part of it all the time, make sure you subscribe to the channel, hit the notification bell so that every time we post a new episode, you'll be notified and you'll learn some really interesting trading wisdom. So welcome to the show. How are you? How is everything going?
Hi, Boris. Hi, everyone. Thanks for having me here.
Nice to have you. Nice to have you. So you have a very interesting background. Tell us a little bit about how you sort of started in trading. And I believe you kind of went from retail to institutional back to retail, which is kind of an interesting journey. Maybe you could give us some details about your life story here today.
Yes, sure. Like for everyone that doesn't know me, technically speaking, I've been in the world of trading since I've been 18 years old. So I started really young. I had a luck to find the currency fund here in my hometown, Belgrade, called Front Team Investment, that started to prep me for the world that is. Like I've been with them for over a year and I've been learning a lot about technical trading from them. And they were the part.
Yeah, what were they? This was an FX trading shop. It was a brokerage house. How is it that you first?
It was technically speaking a currency hedge fund. So they were licensed as a hedge fund, but only trading a currency.
Interesting. And this was around what time? What year was this?
2009, 2010.
Okay, so this was a lot of volatility. This was when everybody was talking about pigs and Greece was defaulting and euro was going up and down 100, 200 pips a day. Mario Draghi was on the front page of every video. I remember those days very well. Yeah, that was a lot of volatility. Everybody thought that the eurozone was going to collapse at that time, right?
Yeah, definitely. Like I really loved that period of trading. It's not boring like it is right now. It was much more fun when it comes to trading. Like we all knew what to do and how to make money. Today it's all compared to old days. And I was with them like for over a year, and they sent me to the Deutsche Bank where I spent 6 to 7 months before I decided to risk it and start my own hedge fund. Yeah, I earned enough money, so I started my fund called the Singapore Grant Capital.
Before we get into Euro Fund, I'm just curious. It's not every 18-year-old that gets to walk into a hedge fund and say, "Hey, hire me." What was it about you and about them that they were open-minded to kind of give you a try? What did you impress on them when you first came?
Technically speaking, I went there as a recommendation from my first company that I worked on, because I managed to turn from, technically speaking, from $500 to 10,000 in a year and a half.
You buried the lead, my friend. How did you manage to take $500 to $10,000, at the ripe young age of 16, 17, whatever you were doing? What was it that you were doing?
To be honest, at this moment, I believe it was luck and
it usually
a lot of luck, but it's a lot of time spent in front of the chart. Like I was trying to trade, take 20 to 30 trades every single day, and I was learning Elliott Wave.
I see. So what's interesting though is generally 99 out of 100 stories of somebody who has $500 in their account end up with them blowing that $500 usually within 1 or 2 trades, because people typically over leverage and then don't use stops. So how is it that you were able to survive long enough to actually catch a big move? Or was it you simply just it was the first trade. You caught this massive move, and it was on that way from there.
It wasn't like that. Like, technically speaking, it took me from 500 to 1,000, I believe, 4.5 months. But I had a deal with my parents. I didn't want to go to college, and straight after high school, I wanted to start to trade. All I had was $500. I knew how to code back then, so I was earning aside by coding. So I had that as my job, and I was trying. Also, I was like, after 2 months back into that front team investment, I had a good deal with them to work as a coder for them, and they were teaching me how to trade.
I see.
So I was copying a lot of their trades, learning a lot about trading back then. So I had that privilege to trade along the best traders from my country.
God, that's wonderful. So it sounds though like you were a very level-headed 18-year-old, because still most people just simply burn $500 on the first trade. First of all, were you trading Forex at that time, I assume? Same as...
Yeah, Forex. So
that's a highly leveraged instrument. It's 100-to-1 leverage that $500 could control as much as, $50,000, maybe even $500,000 worth of capital. How is it that you were able to just ride the wave without crashing? What did you do? Did you have naturally risk-averse impulses where if things went wrong, you would stop yourself out? Did you have self-control from the moment go? How did it go?
It was easy. Technically speaking, I was a coder from when I was 8 years old. So technically speaking, I always had that discipline. Plus, the first thing I learned about trading, they told me you can't risk more than 1% per trade. And I really stick to that rule. Like, even till today, I really am trying to stick to that rule, because I know that I can handle that 1% loss on any account size. But if I lose 50%, it's not that I won't start panicking. But 1%, I really don't care.
So, but 1% of $500 is just $5.
Yeah.
Would you just literally, if I lose $5, I'm out of the trade? Is that what you were doing?
Yeah, I always had a stop loss. Like, from the day one till today, I always had a stop loss there.
Wow. That's really impressive, because most people just would not have the mental patience or the mental fortitude to kind of say, if I'm losing $5, which is just 1% of this account. That's a great rule, by the way. It's an absolutely, God, I wish sometimes I stick to that rule myself, which is a 1% loss per trade means that you can have 10 consecutive negative trades and still keep 90% of your capital intact, which is the right way of going about it.
Yeah, but I'm looking at that, like you said, 10%. Like, if you lose 10%, you need 11.11% to get to break even. And that's something that's achievable. But if you lose 50%, you need to make 100% to get to break even. Right. And at the end of the day, you and me can maybe make 100%, but even for us, it's going to be hard.
Right. I used to have a term for that. I forgot what it was called. It was some kind of it was called the wheel of death or something like that, where basically, you lose 25%, you got to make 50, you lose 50, make 100, you lose 75%, you got to make 300%. Basically, the more you lose, the almost impossible it is for you to climb yourself back out of a hole. The deeper the hole, the harder it is to climb out of it on the capital base. That's a really, really good lesson. So you learned that right away, and you said you were a coder, but when you were starting out, were you trading manually, or were you trading? Did you write code right away?
Yeah, definitely. I was a coder before I started to trade, and when I started to trade, I learned MQL. But at the end of the day, that didn't help at all, because I didn't know the rules of the market, didn't know anything. So I believe that 99% of my trades were manual.
Interesting.
I maybe in the last 5 years started to use automation only.
Wow, very, very interesting. So going back to sort of your origin in the business. You started with these guys who were running a hedge fund. You were there for a little bit, and then you said something about Deutsche Bank. Did they recommend you to Deutsche Bank? Did you?
Yeah, they had a lot of friends that were working in the Deutsche Bank, so they make a recommendation, especially since they were closing out. The owner wanted to retire, so they tried to move every profitable trader somewhere.
Nice.
So he had the luck.
And you were you like sort of a prop? Did it give you some capital, and you were trading a piece of their capital on a prop model? And you were doing well right from the beginning, or did you have any?
It was hard because I need to move. It was hard adjusting, to be honest. But
what was hard about it? What was hard about using other people's money to trade as?
Just because the feeling wasn't the same. Like if I was risking my own money, I didn't have any issue because I earned that money. But at the moment when I needed to open a trade for someone else, I had something in my head telling me it's not your money. You can't blow that account or things like that. So it took me a while, at least 2 months, to get used to operating, just because they threw at me 1 million right away.
Yeah, which was like, I guess, a lot of money relative to what you had. And also size. Everybody says it doesn't matter as percentages. 1 million of a 10 million base is not a lot, but the absolute size sometimes can really freeze people up, especially if you're used to trading small size.
Yeah, exactly. Like I didn't took anything higher than 1 lot prior to that, just because I didn't have that.
Because you didn't have capital, right? And also, that's another interesting thing, Ashley, about all of this is when you go from small size to large size, even if it's small size relative to whatever capital base there is, the actual execution challenges, I think, is totally underestimated. For example, anybody can trade 1 lot in almost any market seamlessly. It's just you're done instant on a click, right? But I'll give you an example myself. I trade prop, and I'm trading like a $250,000 prop account now, large, so I can do large size, and just something super simple like 20 S&P contracts, which is not a lot in any way, shape, or form, will not get done on a click. It'll be like, order done, and then, and sometimes it'll pray and spray, and I'll get six left over. It's fascinating how once you move away from just one single lot, you're not going to get instant execution in almost any market, even the most liquid markets in the world. A lot of times,
exactly.
Did you find that?
I fully agree that was hard for me to believe because, like you said, like just 10, 20 contracts that seems really big, but it takes time, and it took me a while to get used to that part. Okay, maybe these days it's better. But back then it was much harder because we didn't have that big liquidity.
Yeah, you didn't have as much liquidity, so it's much harder. You really were, you had to really, really work for it. The ladder wouldn't be swept up as quickly.
Yeah, I believe, let's say, when I started to trade, for example, spread on the Euro USD was like 8 or 9 pips.
0.89 pips or 0.89 pip? You mean like
9 to 8 to 9 pips.
Actual pips.
Yeah.
Actual pips. Wow, that's insane. Wow.
How everything changed in a few years.
I don't think anybody can even imagine spread on Euro being wider than a pip and a half. And almost everybody these days is either choice or, choice with a quarter pip on commission on either side. I mean, basically, I think fair market value on Euro is probably 0.7 at this point, right? I mean, that's incredible. It's basically 90% shrinkage in spread. So, of course, when you have large spread, you came at a very fortunate time where you had 100, 150 point pip movements in Euro. But imagine trying to trade today's markets on an 8 pip spread.
I don't believe it would be possible, to be honest, to trade that same thing, same strategy these days, just because, like you said, it was easy to expect to see 100, 150 pips move in Euro. Right now, you can't expect more than 30. You're lucky.
A third of the day would be eaten up by just getting even on the spread. Yeah, it's really, really, really true. So you went to Deutsche Bank, and then at Deutsche Bank, did size increase, and were you a little bit more comfortable with larger size?
Technically speaking, Deutsche Bank started to move more to automated trading, and I didn't like that part. They were more or less forcing me to adopt something that I didn't want. So,
sorry, could you go into a little more detail about that? What did they force you to do? What, did they want you to just kind of oversee an algo instead of you making your own?
Yeah, more or less, they changed every manual trader. They want to replace that part with automated trading. So I will still have a job, like have account, earn some money, but at the end of the day, my job would be to monitor some algo, and that's all. And I didn't really like that part.
Yeah, yeah. You were just going to be you were going to be a supervisor, which is the most boring job in the world. Yeah. So what happened then? Then you gave yourself what, 6-7 months, you said, and then you
I was with them 6-7 months. I was happy there. Like, I learned a lot from them. I really learned a lot, especially about the fundamental trading.
Yeah.
Because in the first fund, they were more technical traders. And I knew everything about technical trading, but technically speaking, nothing about fundamental. I knew just the basics, but that's all. And then once I moved to the Deutsche, they forced me to know how to read and how to use the Bloomberg. They gave me Bloomberg terminal and told me, okay, now you can make money. And I'm thinking, okay, that's good, but I don't know what to do with it.
Yeah, no,
so
I get it.
I needed to learn that part a lot, and they helped me a lot.
Yeah, probably being inside of a trading room, you got a vibe on what was important fundamentally and what was just basically noise, right? I mean, there were days when certain announcements really moved the markets, and other days where, whatever release happened, it was done in 5 minutes.
But there you had the meeting every single day. We had a meeting where research team need to present to you everything that's important. So technically speaking, as a trader, I didn't need to know how to find everything, just because I knew that there is someone there smarter than me that do their job correctly.
Right.
But I still needed to make sure that if they told me you need to pay attention to this news, that I'm paying attention to this news and how market is going to react. Right. Just because usually our trades were like 20 to 50 lots.
Okay, so when you were there and you got yourself sort of accustomed to some fundamental news, were you ever doing headline trading? In other words, you're sitting there in the middle of a day, which is probably morning in New York, and somebody says something, or Draghi, remember that famous speech where Draghi says, "I will not let the euro fail," or something, and the euro just literally turns around in the morning and never ever comes back and just goes like, for 1,000 pips. Did you ever like trade headlines? Or, I remember there was also
the headlines. Definitely, like I trade the headlines. I love especially like fundamental part. Let's say US election, Brexit. For me, that was the two most important events.
Right.
And even that Swiss franc crash. Because for some reason, that Swiss franc crash.
I remember the Swiss franc crash. That was truly insane. There was some.
To be honest, that was my best trade, but it was a luck, complete luck. So because I put a sell order early in the morning, and I went to walk my dog. Once I returned, I was like 78,000 in profit.
Yeah, you were like,
and I didn't know what happened.
Basically, it broke. Euro Swiss broke 120 when you were walking your dog. Did you have any idea that the floor was going to break, or you just sort of said, they're really getting close. They're getting close. I'm just gonna.
I was more thinking like price was not like everybody was buy. I'm thinking buy. Like Charles is saying it's short. And I'm saying, okay, I'm going to short.
Wait, did you literally not know that there was an S&B floor?
No, I knew that there was the S&B floor. That's fine. But at the end of the day, like with them, what we learned prior to that is that everything is possible. With the Swiss, you can expect everything. Always expect unexpected. That's how I approach them.
Yeah.
Because they are the best country for finance, if you ask me, but still no one can control them.
Right. No, I remember it was a crazy time. I actually my greatest. I used to make a lot on CNBC. Now I just mainly talk about stocks, but those days all I talked about was FX. And my greatest FX call ever was about a week before the S&B break. I said, I know this doesn't seem possible. I know everybody thinks that the S&B floor is going to hold, but I think it's going to break, and I'd be very, very careful being long here. And then a lot of people sent me a lot of notes after that saying thank you so much, because I took them out like a week beforehand. That was a crazy, crazy day. I remember that day. But that's wonderful. So you really hit hard. So it sounds like a lot of your stuff at Deutsche was a combination of opportunistic fundamental moves taken together with some good chart reading, with just understanding, chart flow, right?
You can say that, just because I really believe that you can, if you want to be a good trader, you need to understand how to read the charts, but you also need to be aware of what's happening in the world. Like, you can't only be a technical trader or just fundamental trader. You need to understand both things. Just because for me, trading, when you approach any market, you are building a story. You need to understand everything what's going on to have all the information to make the best possible choice for you for today or for a long term.
So having, done this for a while, and obviously having both technical and fundamental skills, what do you think the charts do? Do they forecast future behavior, or are they expressing current behavior? What do you think the charts are telling you when you're looking at them?
Like, I'm always looking at the charts are telling me what's happening right now in the market. But when I look the bigger picture, I can see what market done before. And at the end of the day, I'm that Elliott Wave guy who believes in that market repeat itself. So I'm always going to look more at the charts to forecast the future compared to fundamental data. Just because for me, fundamental data usually lags before the charts.
Yeah. Now, do you ever? I have a friend named Jason Spiro who's like a market wizard, and he trades sentiment. He doesn't trade technicals, but he sort of had this great methodology where basically he looks at the idea of a fundamental event that fails. And if a fundamental event fails, it tells him that the market actually, in other words, so let's say, CPI prints super hot, the dollar is supposed to rally, and instead the dollar falls, right? Because everybody is long the dollar. Do you ever kind of use those ideas where, you have the chart, let's say the chart looks bearish. There is some bullish fundamental piece of news, really bullish fundamental piece of news. And initially you get a spike, and then the whole news flow gets completely unwound. Does that give you more confidence on the charts?
You can say yes. I can say yes to that, just because for me, I will always look at the current trend, and always I love that idea of riding the trend. Since if you look any market, the trend do not disappear overnight. Look, gold, S&P, whatever you pick, trend is there.
Right.
But fundamental picture will just help you to confirm your idea of, okay, sometimes it's not going to do what everybody expects, but it's usually, in my opinion, the wider picture. Maybe some data is good, but how Fed will use that data is, in my opinion, more important than anything else. Like, if Fed wants the number to be worse or better, maybe they will do something to the interest rate, let's say. And for me, that's more important to know compared to if the news is good or bad. And that's the only thing, for example, that I believe can't be automated.
Interesting. So speaking of that, let's talk a little bit about automation, the current move into artificial intelligence, the use of ChatGPT to essentially help you code without really knowledge of much code. You've been coding since you were super young. You obviously understand the value of rules-based methodologies. What do you think about the way things stand now, where the machines are slowly but surely replacing many, many, many of human tasks. Originally, they were replacing essentially sort of mundane manual tasks, buy here, sell here, I program it this way. And now they're starting to really replace a lot of cognitive tasks, a lot of analytical tasks. What do you think, of the AI trend, and where do you think it's going? Do you think we're going to still be left with manual trading, or will everything be automated eventually?
Yeah, definitely. Like, I really love that AI trend. I mean, that AI trend is booming for the last year and a half.
Yeah.
I've really seen a lot of change, especially when we're talking about the retail side of trading. We are seeing more and more people making their strategies automated using the AI, GPT, or whatever
Right.
AI they are using. I see the bad part there, just because people think if you type a few things, that's that.
Yeah.
But at the end of the day, ChatGPT is the best tool and also the worst tool for a coder, just because it helped me make the algo much faster than it used to take me. Like, for example, the first algo I was developing for a 6 month. Right now, with the help of GPT, I can develop the algo in a week and test everything in a week. So definitely, for me, that's helpful. But it's hard to know what you need to type into that GPT to make sure that you get a correct thing. Since if you just give them rules and expect it to write you the algo, it's going to fail 9 out of 10 times.
Well, so it's interesting. First of all, ChatGPT is really, really great at saving you all the time on syntax, right? Because, first of all, you forget syntax, you make errors on syntax. ChatGPT is great at that. It's also really good at just creating logic flow. You kind of, it breaks it down and says, oh, this is what you want to do, but this is what's happening. This is where your logic flows get. So as I said, the mechanical things are really interesting. But where do you think it fails, or what is the hard part? Like, where do you have to go beyond in order to help with your algos?
I believe when we talk about helping the algo, like, ChatGPT is a great tool, but it doesn't understand always what you need. Just because we have a lot of different, especially the programming languages, every platform these days have their own language. And when you try that part to code for, let's say, MQL4, MQL5, is going to fail 9 out of 10 times.
Yeah, I mean, just when you're asking it to do a certain function, it doesn't quite understand what you want it to do. The syntax isn't going to be correct, and you do absolutely need to know the underlying syntax to figure out where the errors are.
Where the error is, and that's for me the biggest issue. But I like it, like, if you knew how to write your rules step by step, for ChatGPT to give you that starting point, give you that basic part, how to go step by step, and then you go and make that advance, and that's going to work always.
Right. But what about the deeper question of robots in general? I mean, we are getting to a level, and they keep saying now, that the next GPT-5 or maybe even GPT-5o is going to have a level of cognition that is just literally going to replace a lot of human skill. And I think repetitive skill, like, let's say I'm a CPA, right? I'm an accountant.
Yep.
Honestly, it's the same thing, right? There's a fixed amount of rules. You do your accounting, it becomes pretty rote, right? Even if you're a lawyer, 90% of law, there's a fixed amount of law. The law is kind of, set. There's case law, and there's little variance in the argument, especially if somebody is pretty guilty or pretty not. You break a contract, it's very difficult to argue, oh, this guy's completely innocent. If you broke a contract on most of the things, 90% of law is also can be rudimentary, change. Tell me if you kind of agree, where it's different with trading and with capital markets in general, is that they're really, the law of supply and demand in the big picture exists, but on the way it expresses itself is completely unique and different almost every time, and that's what makes it very, very hard to codify algorithmic trading that works all the time.
Yeah, exactly. Like I completely agree with you. For example, like I really like what we've seen so far from ChatGPT when it started till now. We've seen a really great improvements, and it's really at that level that's fascinating to a lot of people. But I still believe that it's going to take 5 to 10 years that we see a real power and real potential of that, just because it's still too expensive. If you check, like there is no one profitable AI company in the world. Like even the GPT is not profitable. They're just wasting a lot of money. But in terms of result, it's not there yet, just because it's hard to replace people.
Yeah.
And trading, it's hard. Like you said, for me, I love trading and I will always trade just because of that one thing. Market always change. There is no two same days in the marketplace. It's always really a different story.
And I wonder if you would agree with me. There isn't even two of the same type of markets. So let's take, I always say there's only two types of markets. There's trend and mean reversion. There's reversal markets, which we would call choppy. So in other words, imagine something very simple like a 200-period SMA, and the market just simply, winds its way up and down around the 200-period SMA. And then there is a market where it just simply moves away from 200-period SMA in a nice clean trend, right? So if you can identify one type of a market, you've done great. And the algo that is a trend-based algo, nothing more complicated than just say, hey, if you moved away from 200-period SMA, go long, or below it, go short, and you can succeed just on that one single rule. The problem is that if something was choppy, right, the amplitude of that chop can be either very small, so it goes up 5 points, drops 5 points, or it can be massive. It can be up 50 points, comes back down. And at that point, chop looks like trend, and then it looks like chop, and then it looks like trend. And I wonder how you deal with the idea of expanding and contracting volatility, because I've yet to find an algo that can adapt in real time to the, not just to the nature of the market, but to the nature of the changing volatility in the market, which is the really hard thing to do, unless, and that's why people who trade long term, they don't care. If you just simply buy year one and sell year 20, you don't care about soft markets, hard markets, wide volatility, small volatility, because ultimately the direction is there. But if you're trading with stops and targets, you could get stopped out 1,000 times before you get the actual, move in the marketplace. How do you deal with those issues?
Definitely, it's a most valid point I ever heard. Just because that was my biggest challenge that I had, and I'm still trying to find the best solution for that. Just because, like you said, there is no one perfect strategy that can withhold all the market conditions. That's why I'm always trying to find a way how to identify if market have a volatility, if we have a ranging market. Like I'm always going with the idea that worked for me the best so far is that what's been working in the last, let's say, 7 days, that we should continue to see the movement at least for the next few days. And during those times that when we can identify a clear trend, that I'm only running that algos that trade trends. While if we don't see a volatility, then the algo will just pause. But trust me, that was the hardest part. Just because it's hard to explain code to algo, go and find if we have a volatility or not. Especially that all depend on the time frame that algo is trading. Because you can always go and try to see how market reacted during the last session. And if you've seen a move in, let's say, UK session, you can expect to see the move during the US session. Especially that's useful if you're trading some 1 minute strategy. But if you're trading something for 15 minutes, 20 minutes, you will need to look for more, at least see how market reacted during the last day or during the last week.
So
But I
it's really
always go with that part, always
so
trying
it's
more rules.
it sounds first of all, you sound like like a Roman general. You sound like Hannibal. You look at the battlefield, you see the state of the battle, then you decide which one of your troops you're going to unleash into the state of the battle, depending on how the land looks. But most interesting is that it sounds like you always have looked back at the last 5 to 7 days, and that is your state of analysis. In other words, the most immediate past, especially for the shorter term algos, is the most important piece of information for you in terms of how you're going to go forward. And so you're basically sampling the most recent data. And of course, as the most recent, like if the data changes, if the market starts to really trend, like, gold catches a bit, it'll go strong for 5-10 days in a direction. You are early in that process, so you can then unleash the trend algo and try to catch it. Is that right?
Yeah, that's idea. But technically speaking, I have a lot of algos that's always constantly running. For example, if I have one algo running on a live account, I have the same algo running on 10 different demo accounts with the different settings, trying to see which algo will perform best for this month. And at the end of each month, I'm trying to...
Let's take that example. So you have algo 1 runs real account, and then 9 through 2 through 10 are running demos. Various, now are they separated by just timeline or also instruments? So you may have
no, same instrument, same everything.
So same instrument, but just different time frames, right? And
time frames and the settings inside of the algo itself.
Okay, so you're essentially doing parametric optimization in real time on demo accounts side by side as you're trading real, which is really, really fascinating, because most people always do parametric optimization in the past. They're not doing it concurrently. So that's really, really interesting.
We tried that part. We tried that, like, optimize, and I built entire software just for optimization in the past. But at the end of the day, that didn't give a real result.
It optimized yesterday for you. Who cares? You need to know. You need to optimize tomorrow, right? So that's what it did. So you decided, I'm going to trade side by side. So you're going to do contemporaneous trading. So fascinating. So then month is over, or probably even a week. You probably look at it every single week. What do you do? Like, let's say one particular set of parameters is it performing much better than the real stuff like that? What do you go do next? What's your?
I'm
next
always trying, like, every month. I'm trying to go and see the reason which set performed the best and to see why. But I'm not just looking for the most profit. I'm also looking to see which one was the most consistent one, which one has the least drawdown. Just because at the end of the day, our job is to control the drawdown. That's all. Everybody can hit the buy or sell button, but how you could manage that risk is more important to me.
Right.
And I want to see always how algos perform during the bad periods. For example, like from a COVID, like I was most satisfied and happy after a COVID when I realized that my algo managed to survive a COVID, and that entire year, it was my best year in terms of the algo trading.
Wow. It's very, very cool. Very cool. By the way, if you guys hear the sirens, for everybody who's listening, yes, I'm in New York City. You're going to hear, I'm on 11 floors up. Doesn't matter. You're going to hear sirens all day long. It's not that I'm not cognizant of them. It's just that I don't care. So yes, I am aware of my market environment, to let you guys know. Trading battles always have sirens behind them when I'm hosting them. So going back to the idea of, you kind of doing this contemporaneous analysis. If something is consistent, let's talk about your, what is your perfect algo? It doesn't exist. We all have our, ideas. What's your ideal system that you would love to have? And then tell me maybe an example of something that came close, obviously didn't meet it, but just sort of maybe even came close. What is your perfect idea of risk reward, quality system, blah, blah?
Definitely my best idea. Like, first of all, I like for the algo to understand, like we said, what kind of a market we are currently in. And after that, I want the algo to understand the order flow formations, because I love formations. I will always love formations, and I will always give that part.
What do you mean by formations? Do you mean technical patterns?
Yeah, technical patterns, so formations.
Okay, right.
Like I love that part, just because if I see a trend, and if you just use a simple, for example, I use for a long time just a flag, and my most best trades, like during the Deutsche Bank, 90% of my trades, entry was just because it was a flag or a triangle.
Breakout of is it
breakout. It was
breakout of flag or triangle. On what kind of a general time frame? What's your
during that time I was trading 1 to 2 minutes time frames.
It was just you were just as long as it was so basically, and for those of you guys watching, to explain it in simple terms, a flag or a formation is just simply price consolidating, right? You just have you have a move, you have pull, which is like a first impulse move, then you have a little bit of consolidation. And if you have
just 3 legs, like that's why I like flags. It's a simple structure. 3 leg structure where first and third leg are equal. You should have the rule, and like usually first, third leg are equal, so you can use that equal legs as your entry. I know that I don't want to see more than 1/618 of extension there, so I know where to put my stop loss, and I can just use for the first target inverse 127.2 of the entire flag as my first target, and then leave the rest to run.
All right. So for the mathematically challenged, flipping that Fibonacci ratio analysis into a risk reward trade, what does that translate as far as risk reward? Is it like a 1 to 2?
1 to 2. 1 to 2.
1 to 2. 1 to 2. So you're risking $1 to make 2. Once you have that pattern. And obviously, if you're even at 48% accuracy, you're printing money in any kind of formation. It's much harder said than done. Speaking of that, by the way, let's talk a little bit about risk reward ratios, your general attitude towards that, your experience with it. My own personal pet peeve is the number one way I know somebody is lying to me when they talk to me about trading is if they say to me, "Oh, I trade with a 1 to 2 risk reward ratio and I have a 70% win rate," which is, we all know, mathematically fantastical, because if you're able to actually achieve those numbers, what that means is that you're risking $1, making 2, and 7 out of 10 times you're winning. If that was true, within a year, you can take $10,000 and turn it into $1 billion just through compounding effect. It's physically impossible. We all know how markets the markets don't give you lottery tickets. So what is after having done thousands of trades, what is your realistic assessment of risk reward and win ratios that are acceptable? To
be honest, for me, everything more than I'm trying one strategy for a long time. For example, maybe 10 years. It's just supply and demand trading with just trying to trade in a direction of the trend. Risk reward that I learned was 1 to 4. Win rate on that strategy is 23%. Whoever I teach the strategy tell me, but it's only 20%. I'm thinking, okay, but it's making you money. Everybody want 80, 90%.
Right.
For me, 30, 40% is more than enough.
So just to actually understand the margins, because I think this is where a lot of people really misunderstand that trading is no different than making toothpaste. You're making toothpaste, you're making 5 cents on every bar. That's the sort of any product in the world, when you strip it down to margins, unless you're doing software or you're doing the fancy handbags, the $10,000 handbags that my wife buys. The margins everywhere else in the world are very competitive. And so just to kind of understand the margins in that particular strategy, this is a strategy that wins one out of 4 times, right? So if you risk $1, you make 4. However, it's only, so its break-even rate is 20%, right? And it wins 23%. So it's a 3% margin, right? So if you did this 100 times, you would have, net 3 positive trades on that strategy. But that's enough to make money because it's a net positive strategy, right? That's sort of your point.
For me, I always look at trading as a probability game. And it is, like, technically speaking, you can say what people say, I know how to trade, I'm thinking fine, but at the end of the day,
right,
you need a lot of trades to understand that part. And it's all like doing any other business, like you said. It's just a probability. You need to trade. You can't expect like you can always get a better win rate if you take less trades and be more picky about trades. But at the end of the day, if I know that something is working, maybe not as much as I would want, but still make me money every single month, I will try. I will do it. I know that's the most boring part, but at the end of the day, that's trading. Like
so,
you are doing the same thing over and over again.
So let's just take an average, let's say a strategy that only wins 1 out of 3 times, right? It sounds like a lot of your strategies may be in that like 35 to 40% win rate, right?
Yep.
Somewhere around there, if you're doing 1 to 2, is that correct?
I definitely have a lot of strategies. Like I developed over 75 my own.
75 strategies.
Yeah.
Okay.
So definitely a lot of them, every strategy has its own risk reward and risk pools. But on average there, I'm 30 to 40%, I'm happy.
Okay. So we take the whole pool, about 30, 40% of those are winners, 60% are losers, right? So here's my question to you. Most people have like one idea, one strategy, and when you are in that mindset and you're losing 6 out of 10 times, and we all know from probability statistics that you could lose 12 trades in a row. Like in other words, it's perfectly natural in a 60-40 distribution function to lose 12 trades in a row before you get 6 consecutive winners. And virtually my experience for retail traders is if they have 3 losses in a row, they stop. They just walk away. They can't take the pain. So how do you deal with the natural, mathematics of failure in trading?
I think it was hard at the beginning, but at the moment, I believe I had over 100,000 trades. So it's normal. For me, I really don't care. There will be a days.
I'll tell you. Yeah,
I will lose my mind, but at the end of the day, I will just stop, relax till the end of the day or till the end of the week and hop on back. That's all.
I'll hazard a guess as to what you've done. You see, what you did is because you have 75 different strategies, right? And even if they're like 35% accurate, the very fact that you have so many strategies trading so many times during the trading day, some of them are going to produce some winning trades. You've never had. I bet you never had a day where literally, or have you? It's actually I'm curious. Have you ever had a day where every single trade on every single algo that you took was a loser? Did you ever have that?
I don't believe that I had one day where all the algos were red. Right. Definitely done. Plus, I have a lot of strategies, but most of them are automated. Like when I'm trading manually, I will how I approach the market is I just see the market, see where are we, and figure out, okay, if market is trending, I should be using this type of a strategy today.
Right.
I'm always picky about that part. So I'm always trying to get the most. It's not that if I know that my strategy have the low chance of working for today, that I will try, not a chance. Just because it's better sometimes to stay out of the market compared to you need to force yourself to trade.
Yeah, I should have stayed out.
Because I know I have a lot of algos that are already working. So I don't need to put the pressure on myself to actually force myself to trade manual.
So yeah, it sounds like you have a multi-layered approach. You have these algos that are trading automatically. How many of those are live in the marketplace at any given time?
We're currently around 100.
So there's 100 live algos, which are also shadowed by 1,000 demo algos that are shadowing their
algos,
right? So there's a lot of data, a lot of trades that are going on, and then in addition to that, you'll do manual. Now, what's the actual percentage break of capital? How much capital is managed by fully automated systems? How much capital do you allow yourself to manually trade on a percentage basis, relative terms?
Technically speaking, I believe at the moment it's 50-50.
Really? Wow.
Yeah. I still don't believe, like, I trust my algos, that's all fine, but I'm still not at that level where I would give everything to them just because I love to trade. I love to trade.
Right.
Plus, it's different approach to me. Like, I always like to have a small account that I trade manually, a large account, that's all good. I try a prop, but most of props that I tried are closed. Why I pick all the props that are closed, I'm not sure, so I gave up of that space. But, for example, last year I raised 5 million just trading props. And then all of the props shut down.
Were you able to collect a little bit of money at least before they shut down on you?
I was break even, but at the end of the day, I'm thinking never again, trust me.
Never again. That's funny. It's funny because I love obviously trading prop capital because it's a lot of fun, and of course for all the reasons that everybody knows. But what I'm curious is, so like now are you trading just your own money at this point? You have the algo,
just my own money,
just your own money. And have you done the analysis between who does better, man or machine? Are you since it's 50-50? You can get
it's a machine. I must say it's a machine. Like, I must admit, like, it is for a long time. I know that I will have a better win rate. That's all fine. But in terms of amount of the trades, I can't do it. I can't even come close to that.
Yes. And I think so this is a key point. I also just, kind of come to that conclusion when I'm trading side by side. The thing about this is the machine never sleeps. The machine never needs to take a break, doesn't need a cup of coffee, doesn't walk away from the screen. There is no opportunity that the machine misses. And also, there is no opportunity that the machine screws up in execution-wise. In other words, the machine is always going to properly, if you write the code well, buy when you need to buy, sell when you need to sell, manage the stops when you need to manage the stops, that you are not going to do manually perfectly all the time because you're a human being. Is that true?
Yes, I agree. Like, if you, for example, I know for sure that you have some of the strategy where you enter at the end of when candle close. Like, you can code that and say, once this candle close, you open a buy or sell. And it's always going to get exactly at the right time.
Correct.
And you can be the fast, and I love that. Like, I would prefer to do it manually, but I know for a fact that it will take more time for me to do it.
Yes.
So why do it? Like, I love it, and I will still continue to trade manually, but still I will use some sort of a tool that will help me to enter the market faster. Maybe I will tell the tool what to do.
That's interesting. So here you've become like a cyborg. You've really you've combined the best of both worlds, where you have sort of a manual act to trade, but the actual execution you can actually set up. You've written, I guess, code. So you gave me some good ideas for my own algos now, where you could just press the button and the code, it says, if, prior candle is red and current candle, if this candle is green, then go long. Its only function is just to time the entries. It's not there to why it's going on, what the stops are with tights. Its only function is to just basically isolate that one event, which we all know, because how many times have we seen a green candle at literally the very last second of the minute bar turn red, and we're in a trade because we thought it was one way and it's gone the other way, because that's the markets lie to you all the time. That's their whole job. So that helps you avoid that, right?
Yeah, exactly. Like, that helped me. Like, I prefer, especially since I was a breakout trader, and that breakout was the hardest to catch for me.
Very hard.
Like, to enter. So the first tool I ever developed was a tool that helped me I draw a trend line, and once price breaks above that trend line, we open a buy.
You just go buy.
And that saved me a lot of time, to be honest.
Right. Plus the fact if you, God forbid, you went to go get an espresso when the trend line is broken, you come back, you're like, oh, I want this trade, but now I'm 5 ticks behind it or whatever.
Especially like during the news, that's helpful. You can't react during the news. Maybe these days you can, but at the end, because we don't have that much movements. Like remember a few years ago when we had NFP, we knew that you need to be there, you need to work out.
Right.
Today you have NFP, market doesn't.
Today you can take a nap, have the NFP, wake up, press the button, and it'll still be flat. I know, I know. But no, it's very interesting. It's really, really true. So there's algos that are just executing actual logic, and there's algos that are just doing execution, which is really, really valuable. So there's like a whole bunch of computerized stuff. So what I was going to say is, you really have embraced, I guess, because you've been doing this since you were 8 years old, the full power of computing and trading, right? Not just writing your own algos, not having ChatGPT do prototyping for you, not having your own tools, but really the whole set of everything.
I'm working on this part for a long time, like a long time. Plus, the reason why I started to use that automated system was because at one point while I was running my hedge fund, I got really burnt out. Like I was working on average 14 hours per day.
Yeah.
And after 3 years, I collapsed.
Yeah.
Just because my body couldn't take that part anymore. Right. And I knew that as I'm getting older, I can't work that much anymore. Yeah. So I started to spend more money on that part and trying to automate as much as possible. I don't say that I want to replace myself, but at least to help myself, to help me to trade faster. Right. That's all. You
still want to be part of the game, but you'd love to have lots of lieutenants, lots of servants at your fingertips. And I think that's that trend is only going to accelerate. I think it would be I wonder what it'd be 5 years from now. We talk how many software agents there'll be in the space that will do various things. Where I could imagine easily retail traders just waking up in the morning and say, hey. When the ECB, meeting happens, if euro breaks, 140 and then does this, I want you to do this, and then I want you to do this, and I want you to do this, and then just, go back to bed, and the software will do it all for you using commands. It'll be fascinating to see how that works. But sort of back to the idea of trading. Can you give me a couple of maybe if you want to share with us, I don't know if is there a bread and butter setup that you love to use on your manual side, and then maybe you could just share with me.
I like English speaking Elliott Wave like for my manual setup, but when I say Elliott Wave, I more mean that idea that knowing the trend. We know that trends have 5 flags, and that's all I need to know. If I can identify a 5-leg move, I know that there is a good chance that we have a trend.
Do you have? I don't want to put you on the spot, but if you have charts in front of you, maybe you could share the screen with us and just give us a feeling or a view of what a 5. Do you have any charts that are annotated with a 5-leg move that you could share with me? Love to see it. So we were looking. You said to me you trade DAX and Nasdaq. Those are your favorite instruments.
I trade DAX a lot,
right?
Just because at the end of the day, that's Deutsche Bank school.
Yeah. But once a Deutsche Bank trader, always a Deutsche Bank trader. Yeah. So this is dollar. This is dollar.
This is US dollar. Yeah. What I like to see about any chart is a strong move in any direction. And if I knew that there is a strong move, like we see in the dollar index, what I want to be doing is buying a perfect pullback. And when I say a perfect pullback, for me, a perfect pullback is some sort of a formation. For example, a flag. That's a perfect pullback for me. Like if I see a perfect pullback, I want to be a buyer.
Now,
because I know if we see a nice strong move, it's fine.
Sorry, I was going to. Yeah, so it sounds. Are you a buyer at B? Or are you a
buyer at B?
So you're not
buying
a buyer
at the pullback.
You're a buyer at B with a stop at that level at the 5 at the lower end, and you just basically, hey, I'm gonna There's a pullback within the zone. Honestly, now that I look at, nobody is a bigger skeptic of Elliott Wave than me, but now that I kind of look at the way you run it, it's basically just finding a certain retracement level within a clean upward trend, and then assuming that it's going to hold underneath all these, underneath all that support, and resume its trend upward.
Because, for example, let's say market was moving down. Okay, then we have what I call ending diagonal. People call it, let's say, technical word, it's a wedge. We see a wedge referring to us that trend should change.
Mm-hmm.
From there, I know that market should continue to move higher. According to Elliott Wave, any pullback should be at least a 3-wave move. Then we have 1, 2, 3.
Right.
And I don't want to be a buyer when market is around the highs.
Yeah.
I need to buy at the pullback.
Right.
Like I can just throw.
Sometimes
and that's all.
Sometimes, when I'm scalping and I look at my charts, and everybody has fancy, entry criteria and stuff like that. But honestly, sometimes I just look at my scalping and I go, if you just assume trend is up and you buy every red candle, you pretty much win. Like, in other words, if you're in a day where you have a nice, slow, moving trend that holds the 200 SMA, any red candle, any couple red candles, it doesn't have to be fancy. You're going to be on the right. You're going to have the great risk reward ratios and on the right side of stuff. It's kind of, similar type of idea. Basically, if you assume that is the bottom, then you buying at B almost assures that this is going to be a good trade because it's going to have lots and lots of room to go with a good risk reward ratio to target, right?
For example, it's similar in dollar yen. Like we've seen a nice push lower, then say wedge, and we are moving higher. So at the end of the day, definitely dollar yen pullback buys are something that I'm chasing for the last 2-3 weeks. I don't want to think about anything else. Okay, right now what we are seeing is maybe again change the color.
Maybe what kind of a change?
Maybe a wedge that can be a sign that we should see a pullback.
Right.
But still, at the end of the day, I need a pullback. It doesn't mean that I'm not going to trade till then. Like I like to day trade like you. So I can drop the time frame, but even on that smaller time frame, I will wait for some sort of a confirmation, either a 5-wave move to the downside, even on a 1-minute time frame would be good enough for me, just because I can try then a pullback play against the high. And if I'm right, I'm right. If I'm wrong, I'm wrong. I'm fine with that part.
So are you a limit entry trader, or do you just have
I prefer to use limit order, at least a 1 point or people above or below the current price.
I guess like when you're saying yes, so you mean at any time you're entering into a trade, you're going to try to enter at limit versus market. Like you're almost all your executions are going to be limit rather than market, right?
Yeah.
Okay.
Just because I had a bad experience once I opened a trade around the NFP and I hit the market order. I had worst execution and it cost me, I believe, 50K.
Right. And you were like,
never again.
It was in English we say once burst, twice shy. Yeah, that at losing 50,000 on bad execution would make me a limit trader also. But my question is deeper. When you say like let's in the prior thing where it was like zone B and you want to be buying at zone B, do you have an area of accumulation? So maybe you limit 110, limit 109, limit 108. I'm just
yes. I will try. For example, especially with the, let's say, Elliott Wave, I like to use feeble levels and also, for example, supply or demand. If you look, let's say this is 1 minute, it doesn't.
Yeah,
I mean, it's right, but let's say.
So you will. I guess what I'm trying to get at is that you're not going to commit yourself to just one price only, and if you don't
no. Just because at the end of the day, I will try from a small price, 38.2. Just because what I learned from 15 years of trading is that there is never you're never going to be 100% sure that market must end at 50% or
it's a probability. It's a probability cloud. You're buying within a probability cloud.
I'll try the smallest position from 38.2% just because I know it's the bad entry for me. After that, I'll try 50% and then at the supply or demand.
Speaking of that, that's, if you don't mind sharing, what is your typical ratio of sizing? Like, you said smallest at 38, then is it like quarter position, then half position, then maybe another half position?
Yeah. Like 38.2 would be a quarter position for me. Then 50 would be either 0.5% or 1%. And I would go with the quarter position again.
At the best possible price or the worst possible price, depending if it goes against you.
Yeah. But at the end of the day, I still won't lose much. But
no, of course, because you're short to stop. Yes. The bottom line is that the combination of prices and the combination of sizes equals to effectively 1% loss if you get stopped out. Yeah, that makes perfect sense. Okay, it's great.
And on average, I believe I have, at least this month, I had on average 2 to 3 entries per trade, entire month.
Interesting. So 2 to 3 entries per individual trade.
Yeah.
This month. Interesting. Very interesting. And your poison of choice. What are the trades that you trade? What are the instruments you trade the most on a daily basis?
I really don't care. Like whatever is moving. I don't care what market. Like whatever is moving. Just because it's hard. It's hard these days to find.
Like when you come into the day, this is your
like when I come to a day, I'm just going to check everything.
This is your watch list, and you're going to look at what's got the largest percentage moves, or how do you determine?
I'm just checking. Technically speaking, like I'll scroll over everything just to see what moves, and if I see some formation or something that can trigger me and myself. After that, if I can spot something, I know. Okay. If you're seeing, let's say, a nice move in OCEAN, maybe this can be a potential flag, a nice bull run. Okay, let's see. This can be on the watch list. If this is a flag, we know the rules of the flag, what I need to hold. So I can put, let's say, just draw the line on the trading platform and see if you're going to see a break or not. And I always like to have the invalidation point or when to stop chasing something. And for me, usually that's FIBO levels.
What kind of levels? Sorry?
FIBO levels, like...
Fib levels.
Yeah.
Sorry. I just misunderstood you. Fib levels.
So, for example, let's say...
So beyond Fib levels, you kind of chase... Those are your natural constraints. Those are your natural limits.
Maybe a lot of people, like these days, don't agree about the Fibonacci levels anymore, but for me, seems to work the best.
Look, you can make Fibonacci complicated or simple. Yeah. Fibonacci is basically a third retrace, quarter, half retrace, 3/4 retrace.
Exactly.
That's it. As we said, it's never specific. It's general probability. As long as you're in that general probability cloud, that's I think the really interesting takeaway from everything that you're doing. You're not incredibly precise on entry. You're much more interested in being generally right. The great was it John Maynard Keynes used to say that I'd rather be generally right than precisely wrong. So
I can't be right, or like you can't always get a perfect entry, and that's never going to be the case. At least not for me. For me, what's more important is that I'm not buying when market is around the highest level or to sell into the low. Like, why would I do that part? I would rather wait for maybe more for a deeper pullback before I buy and things like that.
Right. I scout all day long, and I trade. I might trade. Let's see, 20 trades a day, 5 days a week, 100 trades in a week, 500 trades in a month, whatever, 5,000 trades in a year. And I think with full confidence, I can say 1 out of 10 trades, maybe 1 out of 15 trades, will I make an entry where it's the perfect, where there's no, where I'm not wrong, where I've hit the bottom or I bought the top. It almost never happens. That's the markets. They're always going to go against you. You have to give it room, to time it, right?
Yeah, definitely.
Okay, that's wonderful. Well, thank you for sharing the charts. Thank you for sharing all this information with us. Anything that you like to wrap up with, like what what's going on in your life? What are your next projects? What's your trading journey going from here? We'd love to know.
I'm really not sure about where is my trading journey going from here, just because I tried everything in trading. I know that I will stick to, let's say, I love to help retail traders, just because I know how hard it was for me to learn. Okay, I have a lot of luck just to be at the right time in the right place to get moved. So I'm teaching a little bit. And also I'm trying to run my algos. I will still try to continue to work on that. We'll give it another year to try to see how many successful algos we will try until we go and build a new algo fund. I decide I will spend the 3 years working on this, until I have at least 200 successful algos that I can pitch to the public, and then we will go with algo fund. That's my idea for the future. To be honest,
that's fascinating. And how do you teach? Do you do Zoom meetings? Do you do webinars? What's your teaching these days?
I'm doing a live teaching, one-on-one only, and I have a class that because for a few years I've been trying to, let's say, coach hedge funds. Just because I'm in that space for a long time, and I have a lot of friends that started the fund in, let's say, the last 10 years. So they hired me to teach their trading stuff. So I was teaching the hedge funds, and then I started to apply the same principle that I use for the fund to the retail market, to teach them the same thing. But for me, I don't want to teach someone just a strategy or things like that. I want to teach them the same process that I went through. For example, I want them to understand how to build the quality research, how to trade, how to manage the risk, just because in hedge fund, that's a 3-team job. Yeah. And when you are trading a retail, it's a one-man job. But a lot of people don't understand that part. Yeah. And that's why I'm trying to teach people how to do all 3 roles and how to use tools to automate their job. You can't automate everything, but at the end of the day, you can automate most part, especially when you're talking about the research these days.
Yeah, interesting. Really, really interesting. How can people reach you? Is there they reach you on Twitter?
They can visit me on Twitter or directly on my website, nikoladelic.com.
Okay, so just like your word, the word on nikoladelic.com, they can visit you there, get much more information. That's wonderful. Well, thank you so much. It's been a really, really fascinating dive into everything. It's not even just one thing, but everything in terms of retail trading. Hope you guys really enjoyed it. Hope you guys come back again for more Trading Battle episodes that we have. Absolutely do not forget to subscribe, to tell your friends to subscribe, and to hit the notification button, because hopefully this is education that you can use every single day to help you trade much better. This is Boris Schlossberg for the Trading Battle. Over and out.